Welcome back to our YouTube channel, where we bring you the latest news and analysis on global economic trends. I'm Mercy, and today we're diving into a pressing concern that's making headlines around the world: China's troubling drop into deflation. This news has far-reaching implications, not only for China, but also for the global economy. So let's break it down and provide some insightful commentary along the way. China's economic performance has significant implications both domestically and internationally. As the Chinese economy faces slowing growth, various challenges are surfacing, from labor unrest to youth unemployment and weak property prices. Last month, it was officially announced that China's consumer prices dropped by 0.3%, pushing the country into deflation. This development has ignited concerns that the economy might spiral into a prolonged downturn. The repercussions of China's economic struggles go beyond its borders. Given the global interconnectedness, the sputtering growth in China could have an outsized impact on other economies, many of which are still grappling with the aftermath of the pandemic. Earlier this year, the International Monetary Fund, IMF, projected a growth rate of 5.2% for China in 2023, contributing a whopping 35% to global growth. However, several major investment banks have recently revised their GDP growth forecasts for China downward, citing a range of structural challenges. Local government debt, an aging population, and regulatory constraints on the private sector are posing significant hurdles. Moreover, the strained economic relations between China and the US, exemplified by new investment restrictions on Chinese technology, add another layer of international complexity. Now, let's delve deeper into these challenges. The current situation calls for more than just tinkering around the edges. It's time for China to consider bolder reforms and stimulus measures to counter the mounting issues. In a recent Politburo meeting in July, there was a call to step up countercyclical measures, but these words need to be translated into concrete action. Two significant obstacles are looming over China's economic outlook: the impending defaults by local governments burdened with massive debt and the psychological reluctance of households to spend. To address these challenges, experts suggest a two-pronged approach. First, tackling local government debt. China could follow the example of practices that have been quietly implemented in some regions. Gavakal Dragonomics, a research company, proposes that state-owned financial institutions should restructure local government debt by extending maturities and reducing interest rates. The current deflationary pressures could provide a favorable backdrop for lowering interest rates. However, this assistance shouldn't come without transparency and accountability. Requiring local governments to publish accurate financial statements, including information on troubled projects, could pave the way for the next step: selling off non-performing assets to both state and private entities. It's important to note that implementing these measures might not be without challenges. There could be resistance from within the Chinese political sphere, especially concerning private business involvement in state assets. Striking the right balance between state control and private sector participation is crucial for finding a sustainable solution. Beyond fiscal matters, addressing the psychological aspect of households' attitudes toward spending is equally vital. Major cities like Beijing, Shenzhen, and Guangzhou have announced intentions to stabilize the property market. This could involve actions like cutting mortgage interest rates and adjusting down payment ratios, ultimately aiming to halt property price declines. The potential ripple effect of these measures is substantial. A stabilized property market could lead to increased consumer confidence, setting off a positive chain reaction. Conversely, if substantive actions aren't taken promptly, the economy's fragility might be further exacerbated, raising the risk of a deflationary shock. That wraps up our in-depth analysis of China's current economic challenges and the implications for both the nation and the global stage. As always, we'll be keeping a close eye on developments and providing you with the latest updates. Make sure to subscribe to our channel for more insightful discussions on pressing economic issues. I'm Mercy, and thank you for watching.